Good evening, everyone. This is Pranav here. I look after commodity and currency research here at JM Financial. So today's session, what we will be discussing more into is the outlook on commodities. So along with the outlook on commodities, we will also touch upon some of on the technical side and what the charts have been indicating. It will be is it going to be the what kind of chart patterns that are building up. So mainly we will be covering the commodities like bullions, which includes gold and silver, metals, energy, and the energies like natural gas and crude oil. So we will be looking into the chart setups, the daily charts as well as the weekly charts. So what these charts are indicating, how the trend is looking on charts. Along with the charts, we will also cover some what are the important levels, resistance levels, support levels that one needs to look into when they go into chart. So we'll be covering two basic parameters when we go look into the charts. First would be the moving averages, that is the long-term moving averages, and next would be the RSI, that is the relative strength index, which one needs to watch when they go into the trading patterns. So why we look into the long-term moving average? That is because we need to know what the trend is going to be going ahead, and a long-term moving average gives us a more indication where the prices are going. Although from the chart itself we get to know that the prices are in an uptrend or in a downtrend, but sometimes this moving averages acts as a support or as a resistance, even a breakout level, when we go ahead. So what does this moving averages indicate? If prices are trading above all its long-term moving average, for example, if prices are trading above 50-day, 100-day and 200-day are considered as a long-term moving average. If prices are trading above all these moving averages, then we consider that the trend is very much on the positive side. And if prices falls below this moving averages, it is considered that the trend is slightly on the corrective side. We may see more correction or it's a negative trend. And what happens when prices get stuck between these moving averages? Sometimes we see prices getting stuck between its 50-day and 100-day or 100-day and a 200-day moving average. It's a period of consolidation where the direction of the trend is still unclear. We may see some prices moving between these moving averages that we look in as we go into the charts ahead. Now, what are the RSI? What are the rules that govern the RSI? That is the relative strength index. Is when RSI goes below 30, it is considered as an oversold region. If it moves above 70, it is called as an overbought region. So what does it mean? If it goes above 70 it means that we should sell? No, we should not sell. We should wait. If RSI goes above 70, it can go to 75, it can go to 80 also. That doesn't mean that we should sell. We should wait for a clear direction. If RSI crosses from above 70 and comes down, falls below 70, that is an indication that the prices could see more correction now. But if RSI continues to go above 70, if it goes above 80 as well, there is a possibility we may see some aggressive buying. The prices may see some extended rally also. So those are the periods we can go long, but a stop is very much necessary and it should be trailed as we move higher and higher. Similarly, if RSI falls below 30, it means that prices have gone into the oversold region, but that doesn't mean that price downside is limited and now we may see a reversal. When the reversal will come, or a sign of reversal will come, if RSI goes below 30 and then again moves above 32, 31, 32, that is a sign that we may see a reversal in the price chart, or reversal in the up move, or some short covering or some buying support coming back in the market. And if RSI falls below 20, there we may see some aggressive selling coming in the particular script or particular commodity which is going down. So we may see some more selling going down. So that is what the RSI gives an indication. Also, in the charts, when we look into some of the chart patterns, candlestick patterns, not the candlestick patterns like it is a doji or it is a hanging man or it is a bullish candle. We look how the chart patterns are formed, how the candles are forming. Are they forming higher highs, higher lows, or lower lows, lower highs, and how the trend changes once the candle moves above other candle. So these are the basic parameters that we'll be considering while knowing the outlook, also looking at the charts and so learning from this patterns. So we'll start with gold first. This is the daily chart of gold. So what can we see here? Where are the prices are currently trading above all their long-term moving averages? The red one is the 50-day, blue one is the 100-day, and green one is the 200 moving average. So prices are all above all its moving averages. Where is RSI placed? At around 58. So this is an indication that the trend is very much on the positive side. If you see, we have drawn a downward sloping trend line from 74,442 and a flattish line from around 70,082, which it is forming a symmetrical triangle, a sideways consolidation. Last week, we had seen a breakout above this level, after which prices are again seen consolidating. Even it is taking support around its 50-day moving average. So here the moving average is acting as a strong support. So the trend is looking very much on the positive side. We see prices going up close to levels of 74,400 and possibly towards 76,000 levels, which would be another all-time high in gold prices. So this is what the trend has been indicating in gold, and the outlook for gold remains very much on the positive side till prices are trading above support at 71,000, and next support is seen around 70,700. So what we will look same thing on the long-term chart, which is the weekly chart. If you see the long-term weekly chart, what it has been giving us right from 2022, the rally that we have seen from above 50,000, from a reversal from around 48,950. Here you see a symmetrical triangle breakout and a rally. Again, a little bit of a consolidation, again a breakout and a rally, consolidation, breakout and a rally. So this phenomenon continues into the gold prices, and it has been hitting all-time highs, what the historical data have been indicating. Last week's breakout again is an indication that the trend remains very much on the positive side, and we are poised to rally towards 76,000 in the near term. That's what the chart is indicating. Yes, there can be a failed breakout, so that is why a stop is very much necessary. We will maintain a stop below 71, or next support, which is around 70,700, would be the crucial support, and a stop should be maintained below the same. Fresh buying in a staggered manner can be done in gold, both gold in gold prices. If we get a small dips, add at a small dip in a staggered manner with a difference of around 300 to 400 points, and can accumulate for higher targets. So this is what the gold trend has been. Same thing, similar chart for silver as well. So first thing we'll look is the moving averages. Prices are trading above all its 50-day, 100-day and 200-day moving average. RSI is placed at 64, so it's still far away from the close to overbought region. So trend looking very much on the positive side. Last week we saw prices giving us a breakout. This time it's a falling wedge in silver. In gold we saw a symmetrical triangle breakout. In silver we are seeing a breakout from a falling wedge. So this underlying trend still remains positive. Silver prices too are poised to see again moving up close to its all-time high around 95,500, and possibly we may see this rally extending towards 98,000 as well in the near term. So what are the support levels on the downside that we need to watch out for silver? Would be around 50-day moving average, which comes around 89,500 at current prices. So again in silver, if we get a small dip, it's a good buying opportunity at lower levels. But the support levels are quite low, which comes around 88. So we'll wait for a small dip and add in a staggered manner in silver as well for higher targets. So this is the daily chart for silver. We'll look into its weekly as well. So what the weekly has been indicating, we have seen to a high of close to 96,000. After which we saw a small correction. Now, last week we again saw a rally, a breakout, and this positive momentum continues in the silver prices. A breakout above 94,200 would confirm this reversal, and then we are in for a strong upside in silver prices. Next, we'll look at crude. So what is happening in crude here? Prices, first thing, trading above all their moving averages. So trend is looking very much on the positive side. A little bit of a correction that we had seen in 3 trading sessions earlier this week, but that doesn't mean that the trend has changed. It is looking very much positive. Prices may find some support around its 100-day moving average, which is around 67.20. Already yesterday we had seen a reversal. Where is RSI placed? At 58, so it is still in the bullish zone. In the positive momentum is in the positive zone. So the trend looks very much on the positive side for crude as well. So what are the levels? What are the support that crude we need to watch out in crude? Strong support at 6700, which is the 100-day moving average. If prices breaks below 6700, then only we expect a reversal in crude trend. Otherwise, the bias remains very much on the positive side, and prices could go up close to 7,100, 7,200 levels, possibly in next 1 to 2 trading weeks. So this is the daily chart. Now in crude, we'll look into the weekly as well. So weekly gives us a long-term picture, what the broad market indicates. As indicated in gold and silver, the trend is very much on the positive side. It is continuously going up. You see the crude, it is just in a consolidation. Ever since it has reversed from around 7,322, it has come down. This week's little bit of a correction. So why we are mentioning the support at 6700? It is the 2-week low, which is the couple of weeks back it had hit a low of around 6710. So that is the strong support. If it breaks that, then we see again prices going down close to 6400, probably towards 6200 also. But till 6700 is holding, we can remain on the buy side, and prices can come close to this resistance line. This is the downward sloping line which we see towards 7,200. So that is why we are positive on crude till it is holding above 6700 levels. Next, we'll move into natural gas. So as we had discussed earlier that natural gas, when prices falls between their moving average, it is generally called as a consolidation period, a sideways momentum period. So see, if you see the natural gas price, although it is in a corrective mode, it has fallen between their 50-day, 200-day and 100-day moving averages. So currently it is stuck between its 200-day and 100-day moving average. The trend looks corrective. RSI is at 35, which indicates that the momentum is still on the negative side in natural gas. So what will be the resistance for reversal if you want to watch? Day before yesterday, it took reversed and it moved up to close to its 200-day moving average, but it failed to cross the same and have come down. So what the strategy, what should we do in natural gas? Any rebound close to 199, 198 or close to 200, 204, we can look to sell, place very strict stop loss above 208 and can look for downside target close to 185, 180 levels on the downside. So that is what the natural gas on daily chart has been indicating. Now we'll go into the weekly chart. So what the weekly chart gives us, a clear picture what the trend is. It was we have seen a bottom reversal in the month of April from around 133. Prices rallied towards 195, 204. So here we need to watch one more thing here. This was a breakout in natural gas price from a consolidation range, as upside rally, but prices failed to sustain and have come down over the past 4 trading weeks. This is the 5th week where it is under selling pressure. So here comes my point that why we should maintain a stop loss. So this is the reason why we should maintain a stop loss. Yes, it was a strong breakout. Prices even went towards 265, 270 levels, but it didn't sustain. It again came down. So we had maintained a stop loss of 217. If it breaks, it is expected to go down. Again, the momentum is negative and we still maintain a negative view in natural gas and expect prices to dip close to 185, 180 levels on the downside. And if it sustains below 180, as in the daily chart it is giving, we may see some extended losses towards 165, 160 levels also. Next is copper. Again, copper prices in a corrective mode. We saw a recovery last week But this week it has been very much completely sideways, no momentum at all in copper prices. Why we are seeing? Because look at this chart, it is just hovering around its 50-day moving average, moving up, down, going nowhere. So what could be the trend, possible trend going ahead for copper? It needs to give us a breakout above 882, which is last week's high. If it crosses 882, then we see prices going further up close to 920, 940 levels, which are near the all-time highs level as well. Where is RSI placed? It is just above 50 levels, around 55. So it is still in the positive. The momentum is still in the positive momentum, but the prices are not giving us a clear indication of an up move. Up move above 882, prices can again start going up, but till it is below 882, we may see this sideways consolidative momentum in copper prices. This is the weekly chart of copper. If we see, it looks similar to silver. A rally from around 680, it has rallied to 955. Then we have seen a correction, again a recovery that we saw last week. This week it is just consolidating, so that is why we are seeing 882. It needs to cross for a continuation of this recovery and another leg of upside in prices. Next is zinc, trading above all its moving averages. Prices are quoting above all its moving averages on daily chart. Where is RSI placed? 58. So the underlying trend remains very much on the positive side in zinc. And if we get a dip, we should definitely go long in zinc price. Support levels are seen at around 265. Next support at around 255. These are the two strong supports on long-term charts. So the trend remains very much on the positive side for zinc. Upside, we expect prices to test targets of 290, 300 levels, possibly in next 2 to 3 trading weeks. So this is the long-term chart of zinc, weekly chart. If we can see double bottom, it has formed around 204, 204.50 in the month of May, and then in 2023, and then in February 2024. So double bottom, a breakout above this rectangle triangle pattern above 234. We saw a rally. It has again corrected towards support at 249, 247 and reversed. So also one needs to note here, we had discussed earlier about price forming higher highs and higher lows. So look at the zinc chart right from the beginning. It is forming higher highs, higher lows, higher highs, higher lows. Here the pattern took a hit. We saw some correction. Again, prices are moving up in the formation of higher highs, higher lows from last 4 weeks. So the trend remains very much positive. 260 is the first support, 255 is the second support, that is the second candle support. Until unless not breached, trend remains positive. Prices are poised to go towards 300 plus levels in the near term. Next is aluminium. In between its long-term moving averages, 50-day and 100-day, just consolidating. It is showing reversal, but it is unable to cross above 50-day moving average. So this is what I mean, going in a consolidation range. This is what the aluminum prices are doing, just stuck in a range. Where is RSI? 50, neither above 50 nor below 50. So it means it's still in a consolidation range. The trend remains very much unclear whether it's going to be positive or negative. Going into the coming weeks, we may see prices getting stuck between 230, 225 downside to 235 to 36 on the higher side. If it is able to break below its 100-day moving average, then prices could come further down close to its next moving average, that is the 200-day moving average, around 214, 215 levels. So this is what the aluminum charts, long-term chart indicates: a sideways consolidation, a breakout, a rally, and then it is gone into a corrective mode. Last 4 weeks, it is just consolidating, going nowhere, trading between 226 downside to 235 on the higher side. We look at one more chart. This is the lead, the weekly long-term chart. Since the liquidity is less in lead, so they have not shown the daily chart. So what the long-term chart indicates for lead, it is just stuck between 170 on the downside to 198. Then prices price formation has been within this range. Although we saw a breakout in lead, but it has failed to sustain and fallen back. So here also again highlights our point that why stop loss is necessary. If the breakout fails, there has to be something to cap our losses, and if we can see a reversing trend, or we can see a reversal on the upside and wait for the fresh positions to take. So here lead fell below this support line and is seen trading below the same. So again it has gone into its consolidation range, and we expect prices to trade between 173 downside to 192 on the higher side. So this is all from my side. I'll open this session for Q&A. If you have any queries pertaining to commodities, you can ask me.
Thank you, Pranav, for a sharp and insightful session. We shall now begin with the Q&A session to address the questions raised by our audience members. So, question 1. What are the time slots in which maximum movement takes place?
See, if we look at the time slots, since commodities is a 24 hours market, going into, if you look into the global market, it starts with Japan in the morning. Then we have the China market starts at 7 o'clock in the morning. Then Indian market starts at 9. So the timings becomes very much important, opening and closing. So when our market starts at 9, Chinese market closes. So that is the opening period where we see some good momentum. 11 o'clock again, the Chinese market starts. So that is the period where we see some good momentum coming in the base metal complex. Base metals like copper, zinc, lead, they witnesses some good moment. Then in the afternoon around 1:30, 12:30 to 1, UK market starts. So that is where again we see some momentum going on. And then finally 6 o'clock in the evening, which is the US market starts, and it is considered as the highly volatile and the highly liquid market. So these are the few timings where we see some good momentum in the market, and the volatility increases as the US market starts from around 6 o'clock till our market closes at 11:30.
Thank you, Pranav. We'll move on to the second question. How can we identify the buying and selling calculations?
Yes, definitely. See this, if we go into the charts, like for example, if I tell you we'll look at the gold daily chart. So how do you identify the buying levels? As per the gold, we discussed the breakout above this level. So this was one indication of a buy in gold. It moved up again. If it has come down to close to its moving average and trying to reverse, so this is an indication of a buy in gold, or for any particular script. If it is coming close to its moving averages and reversing, those are the indications of a buy. And then we discussed in aluminium, it was just stuck in a range. It was unable to cross above its moving average. So if we go again back into aluminium, look at the aluminium chart, daily chart. Again, if it comes close to 234, 235 and it is unable to cross 50-day moving average, there we can go in for sell, placing a stop loss above 236 or 236.50, and can look for lower target close to 26, 28 levels on the downside. So that is how we can identify the opportunity. Apart from moving averages, look at the candle patterns. If prices are moving, forming higher highs, higher lows, it is an indication that the trend is positive. Maintain a stop loss below previous day's low and you can go long, or vice versa in case if you are going short.
Question 3. How to interpret OI data when price is coming to support and resistance level?
Definitely we can look, if prices are coming close to support levels, you can have the OI data. If OI is rising at that point of time, prices coming around support levels, if you are seeing the prices reversing, and if the open interest is rising, you can also look at volume, add volume to that. If that is also rising, it means that we are seeing some reversal from around that level. It should be a good buying opportunity. If you are on the sell side, then it is indication that you should book once, because open interest is rising, prices have started reversing, volume is going up. So exit from the short positions. Definitely you can add long. If prices comes close to resistance levels, watch out for OI. If OI is going down, if you are on the long side and OI is going down, or the volume is going up, so we are seeing some liquidation. So better to book profits and exit from those positions.
Moving on to the next question. Where can I learn more about the basics of commodities trading?
There are various websites from there you can learn. You can just need to read about what is happening in the global market. That is very important from the commodities perspective. How the dollar impacts the gold, silver. What are the factors that impacts oil prices? Which market impacts the base metal prices, like Chinese base metals are more consumed by China. So that is why China's data becomes important. So read through the article, the fundamental news that comes in, try correlating it with the prices, and you will be able to slowly and steadily get the grasp of the commodity markets.
The next question: do individuals trade in the bullion market?
Yes, definitely. It is allowed. Individuals can trade in the bullion market. Gold, silver, any commodities you can consider. You can trade. Definitely trade in the bullion market, futures market. Futures and options both are available on the exchange counter.
Moving on to the next question. Regarding options in commodities, why is there low volume? And is it economical to trade in options as compared to futures?
First thing, volumes. Yes, there are scripts that has good volumes. If you consider crude oil and natural gas, those are very highly liquid. Those have good volumes, open interest. Everything is good in oil and natural gas futures. Yes, but in commodities like gold mini, silver, the option volumes are less because participation is less. And the regulators have been trying to measure, the exchange has been trying to push up the volumes. So once the volume starts building up over there, we can definitely go and in for those option contracts. And with regards to affordability, yes, options comes at a very low premium. Definitely one can trade. Our advice is go into highly liquid option contracts like crude and natural gas, which has good liquidity, which can give you easy entry exits at any point of time.
Okay, thank you, Pranav. With this, we come to the end of the webinar.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.